you in a bit. Let me get Gagan Sidhu into this conversation as well. Gagan, your thoughts on Tesla's entry and how this would sort of change the dynamics of the EV market in India?
Sure, yeah. I'm just going to echo what Shirish said. It can only be a good thing. We're really at an early stage when it comes to India's EV transition. Penetration is, it's been growing, but it's really not at a level where it's anywhere close to what the government visions that it wants to achieve by 2030, which is about a 30% penetration on average, right? So you want the EV ecosystem to grow. You want new ones to come in. And remember, India's EV transition so far has actually been led on the volume side, at least, by two-wheelers, e-rickshaws, and three-wheelers, right? It's the four-wheeler segment which has lagged quite a bit. Some of it has got to do with the fact that charging infrastructure is an issue. Some of it has also got to do with the fact that perhaps there's not enough model offerings. So I think Tesla coming in can certainly add to the mix in terms of boosting the supply or the availability of choices for consumers.
Can you build on to that? I mean, EV adoption in passenger vehicles has been plateauing for the last many months, right? And the adoption is less than 2% at the moment. You spoke about two things, limited options as well as charging infrastructure issues. Let me add to that. There is a pricing premium as well, right? EV cars are at the moment about 30-40% more expensive than an average petrol car in the same category. Do you think that is another hindrance? And will Tesla be able to navigate all of these problems?
Yes, certainly. I think, pricing is certainly an issue. In fact, when you talk about pricing, it's also important to bring up the topic of policy, right? There's a host of policies actually that, we tend to sort of not fit together and look holistically on offer to drive or catalyze the EV ecosystem in India, right? So to start with, for example, there's a production-linked incentive, not just for EVs, but for advanced automobiles. There's FAME, which actually sunsetted at the end of the previous financial year, just last month. But as a demand side measure, there's that electric mobility promotion scheme, which has come in as a bit of an interim measure. There's lower GST on EVs, 5%. There's state level policies on top of all this, right? So I think all of these things sort of work together in tandem to inherently reverse the pricing disadvantage that electric vehicles face vis-a-vis ICE vehicles.
Got it. Let's also touch upon what's happening globally, right? Shirish, I think Shirish is back with us. A couple of weeks ago, Tesla announced that for Q4, their numbers were weak. A couple of days ago, they decided to lay off 10% of their global workforce. This speaks a lot about how there could be a big global slowdown in the EV space. I mean, is that just a blip, or do you think it's a structural slowdown? And what do you think the ramifications of this could be on the Indian market?
Well, not just Tesla. Mercedes also recently walked back from their goal towards 2030 all EVs. So they said that after 2030 also they are going to have combustion vehicles, maybe hybrid combustion vehicles. So globally, all manufacturers, not just Tesla, are seeing a slowdown in the EV space. But let's put it into perspective. Globally, EVs are at a more advanced adoption level. In India, we still have a long runway to go to get there. EVs are less than 2% of overall car sales in India. So we have considerable runway, and India, I think as a market, is suitable for EVs. If you have your own parking space, if you can put your own charger, you are sorted. You don't really have much issue in terms of range anxiety and where you're going to charge it and all of that. In fact, with an EV, it is more convenient. You don't have to go to a fuel station. You don't have to line up for fuel, petrol or diesel or whatever. And also driving around an EV in the city is actually much easier than driving a combustion vehicle. So here in India, if you don't look at what's going internationally, because Indian market dynamics are very different. Also, the affordability levels in India are very different. With an EV, your charging costs are almost next to nothing. It costs less to run an EV than to use a local municipality transport bus. So your running costs are very low, and Indians are very value conscious. So I think there's a long way we can go, and there is space to grow, lots of space to grow in India.
So, you were earlier telling us, Shirish, about the issues that the passenger vehicle space and the EV market are facing, right? Penetration is less than 2%. And there are three main issues that we discussed with Gagan as well. Limited options in the EV market, a premium pricing. Most of these EVs are 30-40% more expensive. And then range anxiety. Do you think we've made any headway with the three of these issues? And by when do you think penetration will reach, about double digits, 10%?
Okay, so let's start with cost. The more players come in, overall costs go down, okay, because volume increase. So that's one side of thing. And that's a great thing that testing it because they do a lot of local manufacturing, and that's really going to help all of us. So that's one. Range anxiety, a lot of the OEMs say that it is over-indexed. We tend to stress a little too much on range anxiety. If you have a charger, and now suppose you are commuting in Mumbai, with your home charger, you are fine. And how many times do you go, say, Mumbai to Goa to go and drive? Once a year, twice a year? That time, of course, you have to plan it out. You have to charge up completely, maybe stop at Kolhapur and then charge until you get to Goa. But the newer range EVs that are coming will have a real world range of, say, 500 kilometers. For your Mumbai, Goa drives that you do maybe walk about. But honestly, it's not really an issue. And if you talk to anybody who's been using an EV, they don't really complain about range anxiety.
Okay, I think you have some issue with your video again, so we'll try and come back to you in a bit. But Gagan, I wanted your thoughts on it. You know, you spoke about how the EV adoption has largely been in two-wheelers and three-wheelers. But even if you look at two-wheelers, right, currently adoption is what, at about 6% levels. How much do you think this can scale up to? And the market structure has been pretty closed. I mean, there are 6 to 7 players, amongst which the top 4 players enjoy 80% of the market share. Do you think this space, the two-wheeler EV space, could open up in a big way?
Yeah, I think, you know, one of the big things that's driving EV adoption in the two-wheeler and three-wheeler segment is that you don't really need to rely on public charging infrastructure, right, to charge these kind of vehicles. You can actually do it in a home setting. That's been a big plus for it. On top of course, all those incentives that I mentioned earlier, right? A lot of these incentives actually are actually driving particularly the two-wheeler, three-wheeler segment. And, you know, this electric mobility promotion scheme, which is coming as a bit of an interim successor to FAME 2, which lapsed on March 31st, actually specifically focuses on the two-wheeler and three-wheeler segment. So I think there's a big push to actually get at least this segment to electrify first, and then to actually have more sort of manufacturing-led type of growth that's going to come and drive the four-wheeler segment. Finally, in tandem with, of course, that all important charging or public charging infrastructure, without which, of course, the four-wheeler segment really will find it very, very challenging to grow.
Gagan, I wanted your thoughts on the auto ancillary space. Which are the companies that could be big beneficiaries of Tesla coming through to the Indian markets? And do you see a large potential here for them?
Yeah, so you know, we don't really track at a company particularly level, particularly in the auto ancillary space. So that's going to be something I'm going to sidestep. But more, you know, broadly for the ecosystem, where we are in terms of penetration, you know, of course, the penetration level across all categories crossed 5%. And of course, it varies. In terms of electric three-wheelers, it's much higher. In terms of electric four-wheelers, it's much lower. In terms of electric two-wheelers, it sort of mirrors where the national average across categories is. But because it's still so low, it can only be a good thing to have a Tesla come in. And I think the way to sort of look at it is the several policies that are in play on offer in India are actually not geared towards any one particular company. It's actually to the benefit of the Indian auto sector. It's not for any company or for any country or against. It's for the benefit of the Indian auto sector. It's for the benefit of decarbonization, right? At the end of the day, you know, we talk about net zero. 10% of India's emissions actually come from road transportation. So if you want to diversify away from, you know, emitting sources of transportation, electric really is the top way to go. And finally, I'll close out by saying that, you know, a lot of us tend to sort of forget what an important role policy has to play in both capital raising and capital deployment decisions. When it comes to the energy transition, we've seen it in the renewable space where quasi-sovereign offtake, where, you know, reverse auction for price discovery and solar parks to sort of mitigate land aggregation risk have done wonders. Similarly, you know, in India, I've talked about all those different schemes on offer. On the demand side, you know, you've got FAME, of course, which is sunsetted, but you've also got lower GST, you've also got state policies. And our own research at CW showed that states with EV policies actually had 2x better volume growth. states with higher incentives actually had 5x per volume growth.
I'm glad you mentioned that, because Tamil Nadu, right? It's known as the Detroit of India. It's aggressively pushing itself to be a manufacturing hub for Tesla. Shirish, you want to just wrap this up for us? Which are the auto ancillaries that could be big beneficiaries, and how do you see this entire thing play out now with Tesla coming through?
See, Tesla makes a lot of this stuff in-house, but look at it in terms of the knowledge that they will bring into the ancillary space. I was talking to the Tata Motors engineering head recently, and they said that globally there is a lot of advancement in terms of electric vehicle technology, but nobody comes and gives that to you on a platter. Nobody shares it with you. So in that sense, we are kind of trying to catch up to what they're doing globally, but Tesla are at the very cutting edge of EV tech. So them coming in will just add to the knowledge base here, which everybody, Tata Motors, Mahindra, all the two-wheeler space that we're talking about. And the two-wheeler space is actually the space that EVs are rapidly growing. When was the last time you heard of a combustion scooter being launched? Nobody launches combustion scooters anymore. Everybody's doing electric scooters. So they will also benefit. And that's what will benefit the mass market transition to electric vehicles. So overall, I think it's fantastic for the ecosystem.
Yes, even I'm very excited, to be honest. Can't wait to see the Tesla Model 3 in the Indian roads, right? And of course, the entire ecosystem sort of growing with that. Shirish, thank you so much for joining us on the show. Appreciate your time here on CNBC TV 18. Let's slip into a quick break. On the other side, our special segment, Quarter Se Quarter Tak. We have earnings expectations from the FMCG sector, and we'll come back with lots more.
Okay, 90 points lower on the Nifty, 22,190 is where we're at. The big mover today, like yesterday, is Senco. Repeat performance, almost 10% on some very, very strong volumes today as well. So that's a specific stop check. But time for our special segment, Quarter Se Quarter Tak, where we bring you earnings expectations from sort of sectors, various sectors. Today, of course, it is FMCG. Mangalam is standing by to tell us what to expect. Mangalam.
Well, for the FMCG sector ahead of the general elections and after a long spate of demand weakness, the question on everyone's mind is naturally, ab ki baar recovery yaar. Well, while recovery is on everyone's mind, let's take a look at the fourth quarter expectations in three buckets. What's the same, what could be different, and what we know. So what's the same? We already know that demand conditions are similar to what we've seen in the last 3 quarters. Operating profits for companies will grow ahead of revenue. That means there would be some margin expansion. And in the consumer space itself, discretionary would do better than staples. What could be different this time around? 3 things. 1, management commentary on demand visibility may have a little more optimism than what it has been over the last few quarters. And that's largely because there's been a gradual improvement in rural with contained inflation. But at the same time, there's also some growth headwinds emanating in urban consumption. And finally, the last few quarters have been about good margin expansion. But going forward, levers for margin expansion could also be limited as companies are passing on price hikes and reinvesting margin savings in ad spends as well. Now, what do we know already? From all the updates that have come by, Godrej Consumer has reported high single-digit organic volume growth, double-digit when it comes to consolidated business. Dabur has reported mid-single-digit revenue growth. The stock declined after its update, and Marico has returned to positive growth territory after 3 quarters. Jewelry, that's shining. Titan on its huge base grew 19%. Kalyan Jewelers saw India business grow 38%, and Senco as well saw a 39% growth in the fourth quarter. So from the staple squad, given the recent trend and analyst expectations, companies like Godrej Consumer, Tata Consumer, Jyoti Labs and Honasa could be the likely outperformers in the sense that it would grow higher than the industry, whereas the underperformance from names like HUL, Britannia and Dabur as well as Imami is likely to continue. For the paint brigade, this quarter will see high single to low double-digit volume growth. However, revenues will be lower than that because the prices are lower because of raw material deflation. But for their near future, it's all about the 4 C's. Commentary on crude and competition, which is very crucial. And to wash it all down, from the beverage end of things, one expects gross margins for United Breweries to improve, whereas for Varun Beverages, this quarter may be impacted by extended winter in the Jan to March quarter, but given the heat wave, they may do a lot better in this April to June quarter, the quarter that we're currently in. And finally, the key triggers that we're looking at, any sort of election-related demand boost, prediction of normal monsoon above normal by the Met, and stocks have seen a lot of time correction. Case in point, HUL and Dabur, they're actually at the same levels as they were pre-pandemic. So the question now again, kya ab ki baar recovery yaar?
All right, well, let's pose that question to Abneesh Roy, who tracks the sector very closely. Abneesh, your thoughts? And, what are the stocks where you're still bullish on, despite the kind of sort of volatility or pressure that we've seen in the recent quarters? Where do you think there is potential for maximum growth now?
Sure, thanks and good morning. So definitely FY24, we are seeing investor interest definitely improve because of 3-4 reasons. One, of course, is this time there will be 6% higher rainfall than normal. Last year, it was 6% lower than the rainfall. So clearly, the rural slowdown, which has been there now almost for 1.5 years, we expect that from Q2, that should reverse. Local player competition has been there in FMCG in few categories that will anniversarize in Q1. So again, from Q2, that recovery will start to happen and that will benefit HUL, Britannia, Dabur, Marico, etc. Third, of course, we will see that definitely pricing growth was negative for most companies in FY24. We will see because of the inflation in the salary cost and media inflation and crude also going up. We see that price hike of 2 to 3% will come back. In Q4, a lot of the results will be mid-tier or a bit weakish. So definitely HUL, ITC, Bajaj, etc. results will be weak. But we expect United Breweries, Tata Consumer, Colgate, Godrej Consumer and Pidilite to be strong. And rest of the companies will be in between. From a stock perspective, I think where is the valuation comfort? Where is FY24 likely to be delta because of the reasons which I mentioned? I think Britannia, Dabur, Marico, etc. haven't really gone anywhere as Mangalam also highlighted over the last 2 years, even Hindustan Unilever. But I think in Unilever, there is the problem of higher royalty and the GSK sales going away. So I would say that Britannia, Dabur, Marico, etc. valuation comfort and the drivers for growth are better. Yes.
Abneesh, do you have coverage on Senco?
So in jewelry, clearly the updates are really good. We have coverage on Titan, but clearly we are seeing that the rest of the players like Kalyan and Senco are also definitely copying the template and doing quite well, growing much faster than Titan because of the smaller base. So I will expect that gold as an asset class and organized jewelry will keep taking market share because still 70% of the industry is with the unorganized players, local players. So yes, I would expect Titan and rest of the listed players should also do well in FY25 because of the gold pricing, that confidence, plus definitely market share gains also continue.
Okay, all right. Hi, Abneesh. Good to see you on the show. What about Nestle? Any view out there from the FMCG pack? Nestle actually has been a relative outperformer in the last 1 year or so. Your view?
So Nestle has done well last few quarters in terms of volume growth and pricing benefiting for them. Going ahead, what we see is definitely cocoa and coffee cost as a raw material is on the higher side for them. And we will see that next 5 years, the royalty cost will go up by 15 bips every year. So currently, our pecking order in terms of good results currently and companies growing faster, we will have United Breweries, Tata Consumer, Godrej Consumer and Pidilite. Nestle will be lower in terms of pecking order because of the inflation risk and because of the royalty cost increasing also.
Okay. Any other stocks that you track closely where you are expecting positive, earnings this season?
I think clearly Avenue Supermart, definitely the update was clearly positive. The store expansion has sharply picked up, which we were highlighting, we were expecting. And definitely in terms of the sales growth and same store comparables, also there is an improvement. We expect improvement in the margins also. So Avenue Supermart clearly the improvement will continue. Same will happen for Nykaa also. Nykaa also, I think clearly the update was decent, and last 2 quarters back to back has been good, and stock has not really reacted too much to the good performance. My sense is we will see rational behavior of the D2C, and that's why we will see Nykaa growing faster than Honasa Consumer this quarter. That's our expectation. So that's also one more company in the discretionary space we should do well.
Okay. Abneesh, we'll leave it there for now, but would love to have you back once we start getting results for analysis. Thank you very much for joining us there. Let's talk about the sort of big driver for global markets, which is geopolitical tensions. This is, of course, the flare-up in the Middle East that we've seen over the weekend. Of course, we had attacks from Iran over in Israel. And then expectations were that things will kind of settle down because that's what we heard from Iran. But now, overnight, we've heard from Israel saying that they've got no option but to retaliate. That's a quote. Sonal Verma is Managing Director and Chief Economist, India and Asia ex-Japan, and Nomura Financial Advisory and Securities. And we have Mr. D.P. Srivastava, former Indian ambassador to Iran, and ex-director Ed Gill joining us to take some questions. Mr. Srivastava, thanks very much for joining us. Sonal, good to have you with us here as well. Mr. Srivastava, I can start by asking you, sir, is there a playbook here? Do you think lots of moving parts? US has said that they will stay out of it. Expectations were that this is it, attack and retaliation, and that's the end of it. But apparently not. What are the chances that this escalates in a meaningful way, sir?
There are in a war situation, there are no scripts. Neither side can really anticipate what the other side will do. The US has advised Israel to take the win. And it has also clarified that it will not join in any offensive action against Iran. It depends. In case Israel takes this advice and does not retaliate or does a symbolic action, the situation will subside. But in case it decides to up the ante, there will be definitely a counter strike by Iran. The first time around, Iran telegraphed its strike in advance to Arab countries and also indicated to the US. Next time around, this kind of warning may not be there, and therefore the results could be worse. So I don't think any side has the comfort of playing by known rules.
Mr. Netanyahu is deeply unpopular in his own country. Is this about domestic politics? More than anything else at this stage? Because as you said, I mean, when Iran attacked, it telegraphed that attack well in advance. They gave a 72-hour notice. So is this about domestic politics more than anything else?
Israel's official position is that they have to maintain or restore the deterrence. We have heard this language when Israel was attacked by Hamas. And of course, there Israel did have justification. Hamas's terror attack has to be condemned. But this time around, the exchange started with Israeli attack on Iranian consulate. So the deterrence argument cannot be taken too far. Iran reacted to what was started by Israel. Now, you mentioned about Netanyahu's unpopularity, and that is, of course, there, and it's going to get his situation is getting more difficult because of the unfinished war in Gaza. They have not been able to either get the hostages released or destroy the Hamas. Netanyahu knows that end of the war could also mean end of his coalition. So there's a built-in escalation in some of the decision makings by Prime Minister Netanyahu.
Sonal Verma is also with us. Sonal, I wanted your thoughts on what the repercussions could be on different economies, right? And more importantly, for our viewer watching us right now, is there any impact at all on India if this escalates further?
Yeah, Sure. I think, just to put this in context, I think for India as well as for most emerging markets today, we are actually facing sort of triple threats. One is oil prices and the future direction and uncertainty around that. Second is the higher for longer theme from US with discussions on whether Fed will cut at all this year or not. And third link to that is really the stronger dollar and the spillovers on capital flows and currency pressure. So the uncertainty and risk of high oil price actually is coming in that backdrop. I mean, what it does for most EMs, including India in particular, is essentially it increases the risk on inflation. It increases the risk of a wider current account deficit going forward. And if the uncertainty and tight financial conditions continue for a longer period of time, then there would be also some downside risk to growth over the medium term. That said, I think things are still quite fluid. I think India does have a couple of buffers in place in terms of foreign exchange reserves that we have, and at I would say until at least $110 per barrel on Brent, we don't think the pass-through domestically to consumers is going to happen. So uncertainty is quite high. Risks have increased, but still in a wait-and-watch mode for now.
And Sonal, your global team, are they calling for oil prices higher or sort of stay here lower? That is one. And the second is the rupee. But it's not just the rupee against the dollar. I mean, a lot of Asian currencies are now at multi-year or multi-month lows. So just a word on that as well.
Sure. I mean, so on oil, currently our base case is the Middle Eastern situation actually does not escalate. So we are assuming that Brent oil prices on average stay around $90 per barrel. So that's the baseline we are going with. Of course, there's uncertainty in terms of whether there is a further escalation or there could also be a de-escalation scenario. So, but $90 per barrel is what we are working with. As far as India's macro sensitivities are concerned, we know that every 10% increase in oil prices, roughly around 30 basis point on inflation, about 15 basis point on growth, and also around 30 to 40 basis point on the current account balance. That said, I think the spillover from higher oil price to current account is clearer, whereas the spillover from higher oil price to domestic inflation is not so clear because oil marketing companies are likely to absorb some of the increase initially. On your second question on the currency side, yes, I mean, there is pressure from the weakness we are seeing also in Japanese yen, and there's upside pressure in China as well on the currency, which is putting pressure on the broader Asia complex in the higher for longer backdrop from the Fed. I think, for India specifically, actually, volatility has been amongst the lowest in Asia over the last many months. We have seen some weakness in INR today, but the entire point of RBI actually building all the FX reserves was actually to manage volatility in times like this. So we do think RBI is going to deploy the FX reserve buffer that it has to contain volatility. So we are, I would say, less concerned on currency pressures for India in this global backdrop.
All right, we will leave it at that. Sonal and Mr. Srivastava, thanks a lot for joining in and giving us, a quick snapshot of how to react to all of this global turbulence as well as the impact that it would have. Let's get back to the markets, which isn't quite ruffled actually. To be honest, it's not a bad outcome today, given the kind of global cues that we had. The Nifty is down just about 68 points. The mid-cap index is actually in the green, well in the green, and there's some buying on dips as well. Mitesh Thakkar joins in. Mitesh, the market has been resilient, at least today. What is the strategy for the rest of the day and what are the stocks to look at?
So I think it's the Bank Nifty, which is, kind of slightly on the negative side, but otherwise it's not a big damaging kind of a picture. Also is the fact that, we have kind of, after opening and making a low immediately, I think we're kind of trying to hold on to that. So overall, it's a market, which is trying to find some feet at oversold levels, and we might see a pullback. So I have one buy and one sell call. ONGC, I think, and it's moved up in the last few minutes as well. But even now, I think I would be a buyer here with a stop below 284. Look for targets of 305. And on the selling side is, as I said, I think it's the banking back looking weak. So IndusInd Bank comes on the selling list. Keep a stop above 1533. Look for targets of 1475.
Absolutely. Thanks very much, Mitesh, for that. By the way, Bharti Hexacom with that 8% pop is the biggest volume-led gainer across on the NSE. So that's a big one coming through. It listed at a 30% premium to the issue price. And now it's, of course, moved up sharply even from there. I think there's a brokerage note as well, which has come through on that one. We'll take a quick commercial break here. Lots happening. Market breadth is positive. 3 advances to every decline. So the index may be down, but the broader market is doing just fine. We're back and we put the focus on commodities. Manisha is going to be here to help us with that. Stay tuned.
Let's shift focus to the commodity markets. Manisha Gupta is joining in. Manisha, what's the one commodity you're tracking today?
Well, I'm looking at metals, and while we continue to talk about copper, aluminum, zinc, which are trading at multi-month highs, but there are a couple of other metals as well which seem to be doing quite well in the trade in the last few sessions there. Tin is on radar because the prices are trading at around 2-year highs right now. We have seen prices gain up by 12% in last 6 or 7 trading sessions. And for this year, it clearly has been an outperformer with 27% of gains. Now, the tin prices have been rising because there are supply disruptions seen in major producing countries, which is Indonesia, Myanmar and Congo. There are various reasons. It's electricity concerns, inside unrest, and Indonesia, of course, is looking at regulatory approvals. But having said that, we are looking at supply concerns, and that has been supportive. Also, when you look at the LME stocks, well, they have seen a decline of 46% in this year at 4,145. And when you also take out the deliverable metals, which already have been earmarked, it's less than 4,000 tons of inventory right now on LME warehouses. There is strong demand coming in from electronics and semiconductors, and that is keeping the tin prices on the higher side. It also has to do with the longs of funds, which are holding the highest long positions levels since 2018, also keeping tin prices higher. The other metal that I want to talk about is iron ore. Well, we have seen prices trade at almost 10-month lows in the beginning of April, but since then it has been a one-way rally. $106 a ton is holding right now, and we are trading at a 2-week highs. The Asian activity seems to be picking up, which is supportive. The prices have gained up by 6% in the matter of last 1 week itself. So when you look at the supply side of it, well, shipments from Australia and Brazil have seen a decline of 28% in last 1 week. Markets also are looking at the Chinese imports, which are at a record 1.18 billion in the previous year there. And there is stronger demand also coming in from the China mills. All of that supportive factors keeping the prices higher.
All right, Manisha, thanks very much for that. So commodities in focus there. Well, let's shift back to stocks. Spark is in focus, and Ekta is going to tell us why. Ekta.
Rima.
Okay, I think Rima is going to take that. Rima, sorry, go ahead.
Well, I won't be talking about Spark, but I'll talk about LTI Mindtree, where the stock has been hit because the spate of senior level resignations continue. So just yesterday, the company announced in an exchange filing that two senior level salespeople, the Executive Vice President of Global Sales, Mr. Pankaj Chugh, and Gregory Dietrich, have stepped down effective 15th of April, which means immediately. And this is a long list of exits that we've seen in the last 12 to 15 months. I've just compiled in the last 6 months, and the high profile one there is CFO. So this has been one overhang on the stock. And plus, LTIMindtree has a higher proportion of revenues or spends or dependency on high discretionary spending. So in the last 1 year, the company's revenue growth has also slowed down. The company pushed forward its margin expectations by a couple of quarters, and plus valuations for LTIMindtree have always been higher than peers. So it's a combination of factors, particularly this senior level exits, which have hurt the stock year to date. Now the stock is down 25%. Back to you.
All right, Rima, thanks very much for that. Now we'll go across to Ekta, who is with us, and she's going to tell us what's happening with Spark. Ekta.
Well, yes, the stock is under pressure today. They did hold their conference call yesterday post-markets, and the street seems to be disappointed because, like I mentioned, I listened into the conference call. There was nothing really very tangible to take home as a near-term trigger post the conference call. So they have mentioned that they will look at their portfolio to prioritize their assets. They will look at out-licensing or partnering earlier than anticipated in terms of other assets if required. Now they are in the process of reinstating their business development activity when it comes to the molecule which actually failed the results when it came to Parkinson's, which is vodobatinib. They are studying it for leukemia as well. They will possibly look for licensing opportunities when it comes to that particular molecule. But when it comes to leukemia, the market size is much lesser than what it was for Parkinson's. So Parkinson's was the real, was one of the real big triggers for which the molecule was being studied for, and now it hasn't really reached the successful outcome. The market size, like I mentioned, would be lesser. The cash balance for the company is around $20 million. They will not be looking at raising equity at this point in time. They would be looking at reducing the cost structure of the company in order to reduce costs. And hence, there was nothing in the near term or tangible to take home as an immediate trigger for Spark. Everything would be long gestation and would be lots of ifs and buts because it's an R&D program that they are undergoing. And that's probably why you're seeing the stock in the red again.
Okay, Ekta, thanks a lot for that. So that is on Spark. But overall for the market as well, right? Just wanted to point out that while the headline index may be indicating red, plenty of stocks are sitting at fresh 52-week highs. So Exide, just look at that. We mentioned that earlier. 5.5% higher now on Exide. It's a fresh 52-week high ever since it signed that MOU with Hyundai and Kia to supply batteries for EVs in the Indian markets. Remember earlier, the understanding was that a lot of these global OEMs will manufacture the batteries in-house. But now, after Hyundai and Kia have opened the floodgates, so to speak, of outsourcing the manufacturing of batteries to a player like Exide, this just opens the doors for a lot of opportunities that companies like Exide can have with other OEMs, other global OEMs as well. And that's something that the street has been betting on. Fresh highs over there. Then you have something like a VA-Tech Vabag. We recently had that discussion with them about water desalinization, how India is going through a severe water crisis, especially in spaces like Bangalore. And look at VA-Tech Vabag, fresh high over there at 823 rupees. So a lot of triggers actually for individual stocks. DOMS is another one, 4.5% higher. We were just talking about how, DOMS has seen a Nomura note this morning on Nuvama note initiating coverage on DOMS with a target price of 1944. So DOMS is also another stock which is in focus. So plenty of names. By the way, I also wanted to mention that don't lose sight of the rupee. The rupee has hit a fresh record low today. I think it's at 85.60 or thereabouts. So there's been a gradual depreciation of the rupee in the last many days. And this morning, the rupee is at a fresh record low, 83.50 now on the dollar rupee. And that's the movement we've seen in the last 1 month. So lots happening in the markets. Let's do one thing. Let's take a quick break. On the other side, we will talk about the monsoons and what you can expect from the IMD. DS Pai, the head climate service division at the India Meteorological Department, will be joining in. Remember, the IMD has predicted an above normal monsoon for 2024, which is a good thing, but more details lined up in a bit.
Okay, welcome back. The market's coming off a little bit more. So 95 points lower on the Nifty. From being down 70, there is a leg down, which has taken place in the last 5-7 minutes of trade. But market breadth still remains positive, comfortably, not quite 3:1, but 2.5:1 is the advances decline ratio at this point in time. Just a few other names apart from what Sonia was talking about earlier. Dhani should come up on your screen. 46 rupees, 12% higher. It's got humongous volumes this morning. So that's on your screen right now. Capacite Infra, right? So that's 4% higher, but it's not the gain, but look, the volumes are very, very large on that one as well. AGs, of course, I've been talking about 5.5 higher, 513 on that name. HOEC is up about 5%. That stock's up at about 203, 204. And of course, Tejas Networks is another one, which has got about a 5% pop. Puravankara had a very large move yesterday. And actually, for the last few days, Puravankara has been moving up steadily from 250 to 380 in 4 sessions flat. So that's a very large up move that one has seen. And, Sharda Motor, I can go down the list, but then volumes are a little lower as far as the markets are concerned. I think we've got the quick check as far as the rains are concerned, monsoon rains, and how they are looking like, or how one should expect them to be. We have the India's Met Department predicting an above normal monsoon this year. They're expecting the weakening El Nino and developing La Nina conditions to be a positive factor as far as rainfall is concerned. Private weather forecaster SkyMet has also predicted a normal monsoon. Mr. D.S. Pai, he's head of climate service division at IMD. He's joining us now to explain to us what they're picking up. Mr. Pai, great to have you with us here on CNBC-TV18. Good morning. Prashant this side. Could you tell us what you know so far with your forecast of an above normal monsoon? What should we really expect as compared to the last couple of years?
If you see that the last couple of years, since 2020, 21, 22, all these were normal or above normal rainfall. Last year, because of the strong El Nino, our rainfall slightly decreased, slightly less than normal, which was around 94%, and IMD had predicted 96%. Now, for this year, we are expecting the strong El Nino year, which is already started to weaken since December late. Now, currently, it is in the moderate level. And in the next 3 or 4 months, it will turn into a neutral ENSO year, and then it is likely to turn into a weak La Nina conditions. So, therefore, we are expecting this year to be above normal, not only because of the La Nina. We are also expecting a positive IOD condition in the later part of the monsoon season. And the winter and spring snow cover over Eurasian region, which generally have an inverse relationship with the Indian monsoon. This year it was below normal, and that is favorable for a normal or above normal rainfall. So therefore, this year we are expecting a good rainfall, well-distributed rainfall throughout the country.
You said you mentioned IOD. What is? Could you explain that, sir?
It is the Indian Ocean Dipole.
Okay.
Similar to the sea surface temperature pattern in the Pacific, there is a pattern in the Indian Ocean which has got a strong influence over the Indian monsoon. So this year, that also is favorable for a good monsoon.
So, I remember some experts, global experts, pointing out that when you have El Nino conditions developing, it could last for a couple of years. That's not clearly the case, right, Mr. Pai? If you can explain that.
Yeah, it's generally the period of an El Nino is one spring season in 1 year. It starts and ends in the next spring season around May. Only occasionally it can extend to a 24 months or maybe slightly more. Just like example, your 86, 87 El Nino. Okay, so there are some examples when you extend 1 or 2, but this year, most of the models are indicating the prevailing moderate El Nino will weaken very fast and La Nina will get developed during the monsoon season.
Got it. What about spatial distribution? Is it too early to will it be well distributed, the rains across the country?
Yeah, see, each year the rainfall distribution will be unique. But however, this year forecast have a very strong signal of La Nina. Generally, we have observed during La Nina years, most parts of the country get a good rainfall except eastern, northeastern part, where rainfall likely to be below normal. So this year also model forecasts are almost indicating similar pattern. So therefore we are expecting La Nina to be very dominant, deciding the rainfall distribution. So except around Orissa, neighboring West Bengal, South West Bengal and Jharkhand and the northern Andhra Pradesh and some parts of northeast part, most other parts will have a normal to above normal rainfall. That's what our forecast currently. However, we will update this forecast around end of May or early June.
Got it. That's good to hear, Mr. Pai. Thank you very much for that explanation. So above normal monsoon, and that is what the IMD's forecast is. And that's an important input for the agriculture sector, which largely depends on these monsoon rains throughout the country. Mr. Pai, thank you once again for being here. Markets down about, 95 points, 22,180 is where we are at. So it's not a big cut or anything. But there is some pressure which is emerging on pullbacks. The Bank Nifty is in, the mid-cap index, sorry, beg your pardon, is in the green with about a 50-odd point, 60-point pop. Market breadth still remains very favorable. 2.5:1 is the advances to decline ratio. It's a wrap on this edition of Bazaar. Thank you very much for staying with us. But Chartbusters will pick up on all the action in just a bit from now. Stay with us.
The Indian market opens lower as geopolitical concerns continue to weigh on global markets. IT, realty, banks, they lead the losses, while metals and pharma gain. The broader market, however, is outperforming the key indices.
LTI Mindtree slumps as the spate of senior management resignation continues with the exit of 2 global sales vice presidents. The company has now seen 7 senior level exits since October 2023.
ONGC rises as geopolitical concerns in West Asia remain at the forefront. Metals too continue to rally in today's session.
Bharti Hexacom surges over 6% after Jefferies initiates coverage with a buy call and a target price of 1,080 rupees per share.
VST Industries also gains as Radhakishan Damani buys 2.33 lakh shares and increases his stake in the company to 34.34% to 35.85%. Hello and welcome to Chartbusters. Another day when the markets have opened up in the red. The only solace is we are seeing some bottom fishing in today's trading session. The markets have come off the low point of the day. The big trigger today will be in the second half of trade, where we have 2 indices that will play out weekly expiry. One will be the Nifty Bank and the other one will be the Nifty Financial Services Index. And if you pull up the Nifty Bank, you'll see that it's not breaking that 20 DMA decisively, which will be giving the bulls some bit of a hope. But the real traction that we're seeing is in the broader markets. More number of stocks advancing in comparison to number of stocks that are declining. So that's pretty good news. 1,600 stocks as we speak. Mangalam.
Good morning, Nigel. You know, when we were looking at yesterday's trading session, there was a dip, then there was a recovery, and then there was a second dip. This morning, the dip saw a recovery. The question is whether there will be a selling into this recovery and whether there will be a second rally in the market as well. And that is something that we'll be watching out for more closely. The second half of trade would perhaps belong to 2 stocks that we'll be looking at in terms of the texture of the market. And that will be HDFC Bank and ICICI Bank, largely because of the reasons that you mentioned. Nifty Financial Services and the Nifty Bank expiry plays out. The Nifty has also taken some support at the 50-day moving average of 22,150 thereabouts, holding around that 22,200 mark. So let's see whether that sustains or not. The broader market's doing extremely well. The question, will there be selling in this recovery and will there be another recovery? Let's go to the expert. Then Shilpa Rao joins in for a quick technical check on the market. Shilpa, what should one do?
Good morning, Nigel and Mangalam, and thank you for having me on the show. Talking about the indices, yes, there is a little, concern whether there will be a selling pressure that we may witness in the second half because we have 2 indices, a weekly expiry today. But looking at the data setup, we definitely have resistance at the upper end of the band that is around 22,300 to 350 for Nifty and Bank Nifty around 47,800 to 48,000. So this will definitely act as a resistance. So I believe any rally towards those levels should be a selling opportunity because this texture for the market is going to stay a little wobbly for the next 2 to 3 sessions. So in that case, we should go with the trend, and any rise on the upside should be sold into.
Okay, got it. Hi Shilpa, good morning and good to see you in. What about individual stocks? Though the headline index seems a little bit jittery, we're seeing it trade in a bit of a range, but from the broader markets, there are plenty of stocks that are moving around. Any ideas for us?
I have one buy and one sell. The buy would be in BEL. The stock is holding very well in spite of all this choppiness. It is trading above 220, which is a crucial support for the stock. So BEL on with a positional view of a stop loss of around 220, keep a target of 260 to 280. It is a little positional trade, but I believe the stock is holding very well, and any sort of pullback or any sort of stability in the market will see the stock rallying very aggressively to those levels. The other one would be a sell in Tata Communication. The results are due tomorrow, however, so it would be more of an intraday trade today. Since it is trading below 1900, I believe there can be some more choppiness where the stock may fall towards 1880 to 1850 zones. But then again, those zones will be a very good buying opportunity. So I believe with a stop loss of 1920, one may sell Tata Communication for targets of 1880 to 1850.